All right, everybody. How is everybody doing? We are live right now. Let's see if everybody can hear
All
me.
right, everybody. How?
Yep, I think everybody can hear me. We're going to start in about 2 minutes. I'm just going to leave some time for everybody to join us. We had a great week, and we had a great trade on the pound, right? On the pound short with our Euro GBP longs. This was a trade idea that was sent to the VIP subscribers. If you're not a VIP subscriber, um, I'm going to leave you a link on the comments or on the chat right here on YouTube, so you can actually join us. Pretty cool. 156 pips. Uh, 156 pips from this setup. Well, the pound versus the euro versus the pound was rejecting again. This big level was an and we went long at the break of this reversal pattern. Targets were hit at the 92 level on this. Let me just show you Euro GBP right here. Pound and well, the targets were hit. This was our entry right here, and yeah, the pound rally 156 pips. These are swing trades. We have to be patient with them. Um, yeah, we have to be patient with them, and I don't think there's a bad. We have to be patient with them. Uh, oh yeah, I mean yeah, the sound. Yeah, we have to be patient with them, and a little echoey, but we're going to have to power through that. I am not at home. I am traveling and I am on my mobile setup, so apologies for the sound. There's nothing I can do. Right, so yeah, that trade was a great trade, 156 pips. If you're patient enough, swing trades are the way to go. Right, right now because we are in a new tier 4 lockdown in London, right? That was crazy, but and everybody is banning people from coming from the UK to their countries. We are going to look for some shorts again on the pound and some shorts again. Um, yeah, let me see if I can do something about the sound. I don't think I can do anything about the sound. Sorry about that, but again, I'm traveling and oh yeah, I can increase the sound. How about that? How about that? Yep, there you go. There you go. Now, I think that now you can hear me fine. There you go. Yep. So we're going to look for shorts on the pound and on the footsy. Let's go ahead and look first. Also, there's a possibility of a DAX long. If I remember correctly, let's have a look. I think we are in the equities. All right. So this is the remove drawings. The footsie, right? This is the footsie on the 2-hour chart. Yes, I knew it. So this is the footsie on the 2-hour chart. Let's have a look at this. Well, we broke with this base, right? This was during our off time. And I mean, the correct place to place a short position has to be here around the 64, right? But if we go to the lower time frames, like the 50-minute chart or so, this level has been retested already. But that doesn't mean that we're not going to go back again and retest it. But we have to think about levels of support and resistance as zones. So basically what I'm looking for is maybe a retest of the previous broken level. I mean, if we are looking at shorting the footsie, right? If we're looking at shorting at the footsie, this level was retested and we made a new low. So right now we are going to be retesting this one right here, and boom, we're going to try and hit our short positions around the 64.30 level, something like this. Now let's go to the hourly so we can analyze. Oh, this is the hourly. Let's go to the 30-minute chart so we can analyze exactly what we are waiting for, right? So basically, this is the lows that we are waiting for a retest for, and this entire zone right here, actually, this entire zone is our retest zone, and we are kind of in a 1, 2, 3, an ABC pattern. I'm sorry. So this should be an ABC retracement pattern or pullback ABC. And if we calculate the C spot, let's calculate the C spot before we actually put on a. If we calculate correctly, the C spot should be the 161.8, and it should be a little higher than we are expecting that retrace or that pullback around this level. So the sweet spot to short the footsy would be here around this level. But this 30-minute candle is very strong, and we are not going to short the footsy blindly, right? Yes, yes, Casey. All swing trades are, all swing trades are sent on the VIP chat only. That's right. And remember, and I need to tell you something. Remember that these are swing trades. These are not day trades. So there will be some days that we will not have setups, right? I am not going to chase the market for setups and for, just to send signals. I'm not going to do that. That's a good way to burn money, right? We swing trade. We aim for big gains in just one trade. So you need to be very patient with these signals. These are not day trades. And you're not going to be receiving 5 trades with me at all. Never. 5 trades a day. You're never going to receive that from me. You're going to receive, however, big swing trades where you can aim at 150 to 150 pips in one trade, just like the Euro GBP. So if you're interested in that, there's a link on the chat. I'll send you the link again. I'm not a guy, I'm not a trader that's going to be sending 5 trades per day. That's just crazy to me. Right, I like to snipe my trades. I like to, be sure about them. I go over the setup again and again and again. I don't force the market. I jump in when the market goes my way. That's how I do things. Right, so let's go. Let's continue. So this is the spot where I would be keen on shorting the footsy. So let's add an alert and let's continue. The thing about the alert is because we're going to look at some other markets, and I want to be alerted. Yeah, I want to be alerted if the footsy actually hits our sell zone and gives us some kind of a entry. We might take a live trade here. If not, the VIP channel will get. Yes, I hear you. The silver swing trade hit stop. That's fine. I mean, yeah, that's fine. I mean, if you know how to manage risk, that'll be just fine. But remember that whenever let's talk about let's imagine if we get here short, right? Our stop losses are going to be above the 64.88. But then if we get a new lower high, we're going to move our stops below that lower high. So we're always managing our risk. We are going to be managing our risk correctly, man, and we're going to diminish our risk as price action prints new candles. So we're always going to be hitting our stop losses with less than 100% of our risk, but we're always going to hit 100% of our profits. So I mean, don't be results oriented in the sense that you don't need to focus. If you focus on one single trade, you are going to lose your mind, right? No, not two slops. No, we haven't traded anything today, Gordy. So relax, right? We're talking about some trades from past weeks. So we didn't have to start losses today. Yeah, only crypto and forex VIP. That's right. So like I was saying, I mean, if you focus on one single trade or the outcome of one single trade, you are going to lose your freaking mind, right? You need to look at this on the long term, right? You need to learn how to manage your risk. Don't over risk on your trades. Don't go all in ever. You know, personally speaking, I never risk more than 0.75% of my equity on one single trade. Um, and it's about making small gains over and over and over and over without with by correctly managing your risk and by correctly managing your losses, that you're going to make money in the long term. This is not a game about focusing on the first one, right? Yeah, we're currently lacking that. We are going to start that. Yeah, Odessa. Yeah, thank you, Casey. I really appreciate that. So Odessa, yeah, we're going to start the results or the equity curve for the swing trades on January 1st. So don't wait. Yeah. So just wait on that. We're definitely giving you results starting January 1st. So we all agree that this is a good spot to short the pound. I'm sorry, the footsy, right? So we have that. So let's move on, right? Let's move on. The euro versus the pound, we already hit those targets. I would be keen on entering long again, maybe at a retest of the previous level. But if I was going to but if I was going to short the pound, I would look again at another market rather than the euro versus the GBP. Remember that if I want to short the pound by using the euro versus the GBP, I have to go long these currency pairs to short the pound. So let's have a look at the pound versus the US dollar. Again, big gap on the weekend. Gap players, gap close players really got burned here, and that's the thing, guys. I see a lot of traders going about, religiously being in front of their computers whenever the market opens, just to play those gap fills, and without any fundamentals behind, and that's a good way again to burn money. So the pound versus the USD is at a very, very interesting level. Check this out. So let's have a look at the move from the open to the lows, right? Without counting um, yeah, the gap. So that's a 257 pip move. Yeah. All right. I'm going to go through the questions after we look at the pound, right? So we have a 257 pip move to the downside, and then we have a pullback, how much? A 136 pullback, 136 pullback, 136 pip pullback. I'm sorry, to this previous base. So that's a very, very, very interesting spot that the pound versus the US dollar is at right now. So let's go to the 4-hour chart to see if we have actually some targets to the downside, and we do. This is quite interesting because this is going to give us a very, very nice risk to reward on a possible short position right here on the pound versus the USD. I'm just looking at levels. I'm just looking at levels at the moment. There's no trade. There's no trade at all, right? I'm just looking at levels. So let's have a look at some structures in the market. Right. Uh-huh. This is not a very structured move in the sense that it's fundamentally driven, but we might get some structures. Some structured retest we're not going to get some structured retest if we don't look for that structured retest, right? So we kind of have something going on right here, but it's not very clean, so we're not going to use it. But however, we are going to be using some feeble, right? I reckon we are at the 261.8, right about that. Well, the 261.8 is actually right here on this target, so this would be a great trade to to go short. Now let's go. I mean, the pound right now is rallying at the moment, so it's clearly it's clearly a good sign of a pullback, of a deep pullback. Let's go to the 30-minute chart, right? So let's have a look at this on the lower time frames, right? Just by looking at levels. I mean, this trade that we are looking at, this possible trade, because we are right here about to print a new high, which is not a good sign. But hold on, hear me out. This possible trade might yield a nice risk to reward ratio, in the sense that for me to go short on the pound, and remember, I'm only looking for shorts at the moment, right? In this scenario, I would have, I mean, my validation level would be below this low. Why? Because we are still making higher highs and higher lows, right? And to me, shorting right here, yes, it would be a better entry, but you would be shorting into strength. You would be shorting into an immediate bullish structure, right? So if I lose my sound, please don't go anywhere. As I told you, I'm traveling and I'm on my mobile setup, so please don't go anywhere. If I lose my sound, I will be right back. So right now, lose my sound, I will be right back. So right now, 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 all right, I'm back. I'm back. Let's see. I'm back. Let's see. Can everybody hear me? If you can hear me, please type yes on the chat. I reckon you can. Yep, you can. So I was saying, shorting here would give us a better entry, right? It would give us a better entry, but you would be actually shorting into a very defined immediate bullish structure. For me to be able to short this market, the actual bullish structure, or the immediate bullish structure, needs to break, right? I am never going to be the first one in on a trade, but I'm going to be the most secure one, right? Because I have justification of my trade idea, right? With me, you're not going to get those 2 pip stop losses. You can forget about that, because to me that is burning money, because those are high risk entries. So let's go ahead and let's define the risk on this short position, right? This short position should give us a nice 1 to 2 risk to reward scenario. Effectively, a 1 to 2 risk to reward. Yeah. Hey Jai, I think that's on your side about the pixel scream and scrambles video. So this is actually a good position, a good trade, right? That I am going to be taking with you. I mean, I'm going to guide you through my thought process on how we do things. Right here, we have the pound versus the U.S. dollar. That's what we're trading, right? So we have the pound versus the USD, and let's go ahead and let's move things about here, right? So we have hold on, I need to grab the position size calculator. This is very, very important. I'm going to reach 1% of that. Let's see, the entry on that trade is about, hold on, let's see, input. The entry price is here, 132.87. All right, 1.3287. And the stop loss on this trade is at let's see, 133.90. So that's a very round number. I like that. 133.90, 1.3390, right? And we are going to go ahead and do this. All right. So this is something that 133.90. Is that it? I mean, that looks like nothing at all of what we had here. No. 133.40. Stop loss level, 133.39. Yeah, 133.40, right? So I messed up on this one. Indicator list, position size calculator, 1.3340, right? So that is our trade idea right there. So my position size calculator says that for me to risk 1%, I should be trading 0.78 loss. So I'm going to put on a new order of about 0.75, 3/4 of a lot, 0.75, and we're going to use a pending order, a sell stop, because we are selling, and the validation price is below our trading level, current trading level. So we said that the entry price is 132.87, right? I'm going to put the entry price at 132.85 because of the spread. 1.3285. The stop loss 1.3340, and the TP should be here at the 132. No, 130. Let's grab the indicator actually. So profit 131.85. So that's about the 131.85? Yeah. 1.3185. Right? So there's a trade. There is the trade. Now, if price breaks with this high and it breaks with the stop loss on this pending order, you have to delete this pending order because the trade idea is no longer valid because price made a new high. Those are the rules, right? Follow the rules. As long as price is trading inside of this range, which is the range between the validation and invalidation level, we are fine. But if price breaks to the upside, we are going to delete this pending order. That's why I use pending orders, right? This is the main reason I use pending orders. Right? This is the main reason. Rene, just Google position size calculator on Google, and I mean you're going to find tons of them, right? All right, so let's move on. All right, let's move on. Euro US dollar. Can you hear me, guys? Yeah. All right, cool. I don't think you can hear me. I don't think you can hear me, but we have been live for about 30 minutes. I'm gonna keep on keeping on. Hopefully you will be able to hear me. So cool. So if you have any questions again on the chat, let's go about other questions. Yeah. So position size calculator, guys. You can Google that. You're going to have a ton. There's also some on the MyFX book or some sites like that. Let's see. Yeah, about risk management. I agree with you. Risk management, max 2% of rights account. Right, cool, guys. You see. All right. So whereas if your account is 5,000 or greater, you should be able to open 12 positions. Wow. No, I don't know about that, mate. I don't know about that, but the thing is about, I mean, risk size. I mean, about you have to you have to definitely look at this in percentages. This is a game about probabilities and percentages, right? Simple math. Don't ever look at your results in hard cash, or just look at your results in pips and percentage wins and percentage losses, right? So I mean, and please have a defined risk management in the sense that you're not going to be opening 12 trades at 1% risk in one session. That's crazy. You have to be, I mean, here the less is more. The less you trade, the better you're going to be in the long term. No, Nicholas, I don't think so. I mean, there's ton of opportunities to make money actually. Remember that this is a very different different environment that we're trading with the pandemic, Brexit for the UK, etc. I mean, there's definitely going to be some good there's definitely going to be some good opportunities to make some money, right? We're not going to be over trading. We're going to be scaling down on our trades. But this one, I mean, for example, this one on the pound versus the US dollar, it's a pretty clear one to me. I don't know about you, but it's a pretty clear opportunity to short the pound versus the US dollar to previous lows. I like that. All right, so let's move on. I'm going to send this signal to the VIP channel because no, I mean, and this is a free signal for everybody that is not on the VIP channel, so you can actually see my thought process and how I trade the markets. Because I know that sometimes just by receiving the signals on a free channel, you don't get everything that I'm thinking about. But hopefully now you are going to, and yeah, let's move on. Remember that you're welcome. Remember that that if price breaks with the highs, we are going to close that pending order. Let's have a look at gold, shall we? Now, gold, that was a crazy move to the upside and to the downside. I mean, this is quite volatile, and to be completely honest, I don't know what these lines are, so we are going to delete everything right now. To be completely honest, let's have a look at what happened here. We missed that opportunity to short gold. Right here was a pretty clear short, right? But this was during my, I mean, this was not during my off time, but I was in front of my computer when this happened, so I missed it. But that's completely fine, right? But let me guide you through what's going on right here. Risk is back on the market, so this move to the downside has to be US dollar, has to be because of the USD, right? Yes, Nicholas, I do have some certain pairs that I trade more confident than others. I actually and this is something that you need to do, right? I mean, yes, I mean, we analyze the markets on a technical base. We enter our trades on a technical base, but I only trade the markets that I know, that I understand how they move fundamentally, right? I mean, that's why I don't trade agriculturals. like corn, like uh, all agricultural, actually coffee, etc. Because I don't understand fundamentally how or why that market moves, right? That's why I only trade crypto when I see a great opportunity, and my preferred markets are metals, um, and my preferred markets are metals and the pound, the euro, and the Japanese yen, right? I almost never trade Kiwis, dollars, Aussie dollars, and I do like the Mexican peso too. So what happened here is that I mean we are in a very defined up move, right? And right now, what happened is that we broke to the upside, we retested it twice, and then we trapped some bulls in the process, and bam, price just moved to the downside. So are we going to look for longs or are we going to look for shorts in this market? Let's have a look at what we're going to be doing, right? The first thing to do is to look for buyers. And the thing about this market is that it's extremely volatile. So you need to be careful with it when trading it. And if you're not used to volatility in the market, my advice is that when and if you enter a position in gold, just go about it on half of your normal risk um, because yeah because it's just too volatile. So I think that in this case I will be looking for to go long in gold, but there's no setup for me at the moment. So and that's the thing, guys. For example, right now it's pretty obvious that we are going to go higher, right, in gold. This is a huge rejection of the lows. There's a lot. We're going to look at some volume profile too on gold futures right now, and I reckon here there was a lot of volume being traded and a lot of bulls jumping in right here, and yeah, the highest probability move is to the upside. But because I don't have a defined risk to reward scenario and I don't have a defined entry, I'm not gonna take that trade. Yeah, I mean, I really don't have a fear of missing out. If I do, that's fine. And if gold moves to the upside, that's fine too. I will be looking for this setup instead because it will be a higher probability. But in any case, why don't we have a look at GC, right? GC is gold futures, and we're going to look at some volume in GC, right? Remember that because I don't have actual live data on TradingView. This is going to be 10 minutes delayed, but it doesn't matter because we are not scalping the market. We are not even trading based on this chart. So we're going to look at some session volume, right? Oh, I think I can look at session volume because I don't have we can look at volume right now. I'm not on my computer, so I don't have my account open yet, and volume is just for premium accounts. But that's fine. We're not going to look at that then. So gold. I will send, however, that volume study to the VIP channel later on. Okay? Yeah. So you were asking about that pound, right? We're still in. I'm still not going to delete that. The target on the pound, it's 131.85. Right. So let's go back to the gold chart. Yeah, it's a sell stop. So we were saying about that gold. Okay. Now, if we go to the lower time frames, 50-minute chart or so, you see, this is the thing about this moving gold, right? This is the reason I don't like it, because of these rejections right here to the upside, the 1883.50. Those are some big rejections to the upside, which is making this move to the upside look very pullbacky. Pullbacky is a word that I just invented. That means that this is, I mean, the move to the upside is not looking like a strong move, but rather than a pullback for further continuation to the downside. Let's have a look at the DXY, shall we? Because we haven't looked at the US dollar. And I think that, yeah, as I told you, this is, I mean, this is looking to be very US dollar driven, right? This is the 50-minute chart on the DXY. Let's go to the hourly. So that move in gold, it's looking very very US dollar driven, in the sense that we got that big rally at the open, and right now the DXY is just moving back down. Remember that we are fundamentally and long-term, mid-term, and even short-term US dollar bears. So we're not going to be looking for US dollar longs at any time soon. Fundamentally speaking, the relief bill of $900 billion just passed the Senate in the United States, right? And that is going to have some very bearish pressure on the US dollar. Why? You have to look at currencies as commodities, and the more currency is in circulation, the less valuable one single, in this case, dollar is. Why? Because there's more dollars in circulation. And this is what's happening, right, with QE. QE is quantitative easing, right? So here's a little bit of a macro lesson for you guys. QE is quantitative easing. What happens when quantitative easing is in play? Well, the Federal Reserve is actually printing money, but they don't actually print the money. What they do is that they inject liquidity into the market by buying government debt from banks, right? What happens is that an economy goes into recession, or the main factor why an economy goes into recession is because of the lack of access to credit, because everybody lives on credit. So when the economy is entering recession, there's less access to credit, which creates a snowball effect in which citizens are not going to have money to buy, which means that the industry is not going to is going to cut their production, which means that they're going to cut their jobs, which means that there's going to be less wages distributed, etc. Right? So what the Federal Reserve, or what central banks do, is that they inject liquidity into the economy by buying government debt, in this case T-bonds, right? And with this liquidity, banks can afford to have riskier loans, and they distribute that liquidity into the actual economy, right? So they support the economy, and but that has an inflationary effect on the currency, right? Which is why the US dollar is, or has been, crashing since the pandemic. So there you go. You have to look at, you have to understand why these moves happen, right? And that's the reason we are not going to be looking to buy into any US dollar weakness, right? We are only going to be trying to sell into any US dollar strength. So that's the macro lesson for you guys. And that's grosso modo, right? If you want, if you want to learn more about that, just read about it, Google it. Well, it's very interesting, and if you're going to be trading currencies, that's what you need to do, right? So that was that explosive move on gold, to the downside, was US dollar driven, right? So we know that. And now the US dollar is moving down, which means that we are going to be looking for gold longs. And but I don't like the gold longs at the moment. Why? I already told you, because we don't have a defined risk to reward rate, a defined risk to reward scenario. And if we did, the risk to reward right here is just not good. So I'm not going to take any longs on gold at the moment. I'm going to wait for actual direction, and more so because we are still trading inside of this range. I need direction, right? I want to jump into a move, so I need direction, and direction will mean a new higher high is created, and I'm gonna be jumping in on a bullish flag. That's my that's my plan in gold, and that should be yours too. I mean, you can do whatever you want, right? I'm just telling you what I'm going to do. Let's have a look at the pound versus the US dollar. Uh-oh. So we are going to be leading that order. Yeah. I mean, not just yet because we are still in, right? Let's go to the 15-minute chart. But that, I mean, just to have a look. This is the main reason that I use pending orders, right? If I was to, I mean, if I had shorted right here, I mean, I would be in a losing trade at the moment. But because I use pending orders and I use my validation and invalidation levels, I mean, I'm clearly on the, I mean, I'm safe on the sidelines at the moment. That is the reason that I use pending orders. That's the reason that I trade the way I trade. I have done the research. I have burned money doing the other things, and this is my thing now. Yeah, so, I mean, so we have been live for 41 minutes. Remember, I think I'm going to be uh, taking off. This is our VIP channel. Yeah, this is our VIP channel. If you, I mean, be part of the VIP channel, I'm gonna give you the link right now. This is the link. Just go ahead. Very inexpensive, and you're going to have a great time with us. Right. Thank you for joining me, and I'll see you around, guys. If I don't have a great or a Merry Christmas, I reckon I'm going to see you before the New Year, so we'll hold on that. But again, thank you for joining me. And remember that if the GBP USD breaks above that, actually, we have printed a new high, and that there you go. So we are going to be deleting this order before we go, and that's great, right? Uh-oh, right here, right here, right here, delete. So yeah, I accept. Hold on, delete.